the insurance market will try and put in front of you. So one of that is the commonly known excess. So if you ever have to claim on your mobile phone, you probably have to pay £50 first before you submit that claim. And so some of these insurtech platforms, what they're trying to do is cover that excess. So what they're doing is they're creating a peer-to-peer mutual where they'll say, I'll put in 10, my mum will put in £10, and my brother and sister and someone else will put in £10, and that will cover at least one excess. So the notion here is about dealing with financial barriers that are put forward by an insurance company to prevent people from claiming. And we have an example of that in France. They are a regulated crowdfunding insurance platform. I think that's the only one that exists in the world in France, and they're called Inspire. But it's interesting because a lot of people who are looking to start up in this field are thinking, well, what are the regulatory parameters? Can I start this up and passport this out to the rest of the European Union? You know, make use of the fact that we're in the single market, or will be for the next month. And so there's this notion here of fragmentation. So fintech goes at lightning speed, but the regulators can't keep up. And in particular, the European Commission. The European Commission is of the view that crowdfunding as a notion, you know, they're very welcoming to it because they realise that SMEs are not getting money from the bank. But at the same time, they're not willing to engage in harmonising crowdfunding laws, which means that you could end up with a situation where Inspire in France is regulated as an insurance crowdfunding platform, and Guevara is regulated in the UK as an insurance broker, but they're essentially operating as a crowdfunding platform. And if Guevara tries to passport their service into France, the FMA in France may say, oh, no, you need to get a crowdfunding license. So there's this element of fragmentation, even within a single market, which is simply a symptom of the regulators not being able to catch up. Now, because of all of this confusion that it causes, because regulators view it as broking, or they view it as crowdfunding, they don't even know what it is to a certain degree. Then you look at blockchain. Blockchain comes in and disintermediates everyone. So by removing all of these intermediaries, effectively you're ending up in a situation where there are no regulations that in principle apply. The intermediary in this context is a piece of code that everyone is running on their own computer. I mean, in this world there are no brokers. There's a code. There's Thomas Bertini, a tech guy, driving this, writing up a smart contract that everyone can use. But then you take it one step further and you look at the DAO, Decentralized Autonomous Organization, which is simply the extension of the notion of a smart contract. This piece of code has raised $100 million above that. It's a VC fund without even a fund manager. I mean, that's pretty phenomenal. And it relies upon the notion of pure democratic control. So all of the members of the DAO make the decision by majority. And if you look at an insurtech platform that exists in New Zealand, they're called PeerCover. They work on the peer-to-peer mutual model, which is everyone put in the same pool, we trust each other, and if there's a claim, we pull from the pool. But the way that they arbitrate those claims is by democratic decision. So if 5 people are in a pool, you need 3 to make the payout. Well, frankly, you could do that with a piece of code. The DAO is doing that today with $100 million plus. So in the future, PeerCover will become a DAO. And that's where I see opportunities within the smart contracts community. But we must bear this in mind. Even though this is kind of a green field for us to play in, if you're a tech guy, disintermediation has also limitations. If you look at the peer-to-peer lending platforms, it actually obviates the need for the licensing of lenders. So if I say to you, oh, I'll lend you a bit of money, and I'll lend you a bit of money, and I'll charge a bit of interest, well, I need to get a license to do that because I'm providing consumer lending. And in most countries in the world, you need to get a license. But you see the peer-to-peer lending cover, the platform itself, obviates the need for me as lenders to get licenses. And if you take away that intermediary, then now these market participants engaging in smart contracts or DAOs may end up needing getting licensing. So you can have an underwriter in a DAO that needs to be a licensed insurance guy. So this is, you know, it's a rock and a hard place out there, but smart contracts offers an opportunity for kind of refining your coding skills and playing with these concepts and not getting caught up in regulatory fragmentation. And that's all I have to say before we move on to the final speaker, and you can go and get your drinks. Eddie Travia from Concilium, a lot of experience. I know Eddie from back in the day. This is when I quit law effectively, working for people to work for myself and advise people. I met Eddie, and he did the first, I mean, even before DAOs raised 100 mil, he raised at least $1 million in Bitcoin. No one had ever done it. And it was the first virtual Bitcoin incubator. So Eddie's gone a long way. Now they're listed publicly in a market in London. And he's got a lot of experience working with startups in this area. So I really wanted to get Eddie's views, sincere views.